a year ago.
Okay, some great profiles of people in here who've made the move overseas. I want to start with Stephanie Sinclair. She's 40. She was based in Atlanta. Buying a home in Italy was a long-time dream that came true this April. She was paying $3,000 a month to rent a 4-bedroom house for herself and her son in Atlanta. She found it impossible to scale up and become a homeowner as prices skyrocketed, even though, Carol, she had $300K in cash on hand. So she went to Italy. She's always loved it there. She was able to buy a 3,100 square foot house in Musomelli, Sicily, as well as a smaller home next door and an 800 square foot storefront, all for 60,000 euros, which is about $60,000. Incredible, right?
Oh my God.
I know. You'll take 2, right?
Oh my.
Or 3 like she did.
Okay, just take the whole family and make a compound, right? The average price of a home in Atlanta, just for some comparison, over $404,000 as of June 30th. That was up 19% from the previous year, whereas an 800 square foot property in the Palermo region of Sicily cost a little over 86,000 euros on average, according to Zillow and Idealista. I have to say, I have family that lives in the South. Everybody's moving south.
The south of the U.S.
Yes, and family members who bought a home, and they have just skyrocketed, like almost doubled in value in like 2 years.
Okay, Italy, here we come.
Yeah, I'm ready. I'm ready. Get my passport. All right, you're listening to Bloomberg Business Week. We're just getting started on this Wednesday. This is Bloomberg.
Okay, traders, look what's happened with euro. We need to move our stop loss even lower because it's short position, and I'm now going to place stop loss 101.84. Okay, 101.84, stop loss placed. Please copy this trade, okay, and you're already in profit. Well done, guys. All of you who decided to follow trade, who copy this trade. Look, we started at, let's say, 5 o'clock, little bit past 5, about 7 minutes past 5. Right now 9 o'clock, and we already in 3,000 pounds in profit. Okay, guys? Good trade. I'll speak to you later. Well done.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Do want to begin with a developing story out of Lyft. Lyft said to be laying off about 60 employees and folding its car rentals for riders. This according to Dow Jones. Lyft shares, they're up now by 3.3%. Mixed day for the U.S. stock market. The Dow now down 87 points, down 0.3%. S&P up 8, a gain there of 0.2. NASDAQ up 125, a gain there of 1.1%. 10-year yield 3.02%. The 2-year 3.23%. Spot gold down 0.6, $1,700.89 the ounce. I'm Charlie Pellet, and that's a Bloomberg Business Flash.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
Yes, indeed, everybody. Welcome to the Countdown to the Close. I'm Carol Master, along with my co-host Tim Stenovic, joined by our TV colleagues Carolyn Hyde, Taylor Riggs, and Gina Martin-Adams. We are walking Bloomberg audiences across TV, radio, and YouTube, what they need to be watching out for as we head toward the closing bell. We still have an hour and a half or so left here, Caroline, but I feel like that Google news definitely shifted the tone in the markets.
Yeah, and it feels maybe even some European concerns as well, whether or not we're seeing political fireworks as we get pretty used to in the summer over in Italy, and of course the all-important ECB tomorrow. But at the moment we are looking at an S&P 500 that is still just clinging into the green, but only just up 8 points, so much for yesterday's breadth. The Dow Jones off by 0.3%, but look, big tech is still in charge. We're up by more than a percentage point in the NASDAQ, 130 points higher. And Taylor, Russell 2000 still also outperforming again, up 0.8%.
Great sort of markets wrap here. And Caroline, I think what I love about this time of the day is we get to take you through some of the key things that we're watching as we start to kick off the closing bell, count you down to these closing bells. I think for me is it that bottom? Is there capitulation? That's certainly been B of A versus the analysts over at Sanford Bernstein that have been sort of maybe debating this topic. Gina, for me, it comes down to where are we in terms of some of these stress signals. You have the percent of stocks that are trading near or below some of those 52-week lows. That number is rebounded a little bit, but there's still some signs that they're there. Really wondering if we've hit that key washout level.
Yeah, and you talk about breadth and price, but I think breadth and multiples is also important to consider. When you look at breadth and multiples, you've got roughly 20% of the index actually trading at below 10 times earnings. So there are some deep values that have emerged, and I think that justifies the nibbling that we've seen in the market for the last 6 weeks or so.
All right, well, one of those companies getting a little bit of nibbling today is Netflix. Shares higher by a little more than 5% as we speak, as investors digest the company's most recent earnings report. The company shedded fewer subscribers than analysts thought. Check out what Netflix founder and co-CEO Reed Hastings said on what led to the, well, quote, less bad quarter.
If there was a single thing, we might say Stranger Things. But again, we're talking about, losing 1 million instead of losing 2 million. So, tough in some ways, losing 1 million and calling it success. But, really, we're set up very well for the next year.
That was Netflix co-founder and co-CEO, Netflix founder, I should say, and co-CEO Reed Hastings on the company's, quote, less bad quarter, Taylor.
And I think that that's what we're going to call it. Not as bad as feared, right? When you think about some of the analysts, and as Gina's been pointing out, a $700 to a $400 stock to a $200 stock. So maybe we're getting more excited about a loss that isn't as much as expected. So maybe better than feared, Caroline, is what I'm going for on this one.
What was worse than feared was that happening over the Atlantic. And I'm not just talking about Italian politics. I'm talking here about the UK. I'm talking about the Great British price rise that we are seeing. Inflation up 9.4% in the month of June. You know why. Energy prices, of course, big exposure to Russia in Europe and indeed in the UK, and indeed the gas prices going ever higher, but also food prices. And the key issue for me is 9.4% is not where it's going to end, Tim. 11% is likely to be the peak over in the UK come October, even as the Bank of England is expecting to do its biggest rate hike, well, since it was given its independence as a monetary authority.
Right, it's that supply-demand issue there, right? They can raise rates and decrease demand, but the problem is if if the supply of energy does not go up, and if it's fixed, and if demand remains strong, then that energy is going to be expensive. And like you said, when that energy price kicks in October, we expect those prices to go up. So no inflation, no sight to end that inflationary environment.
Well, Caroline and Tim, you set me up perfectly for what I've been keeping an eye on, and that has to do with what we heard from Russian President Vladimir Putin, signaling that Europe will start getting gas again through a key pipeline, but, and there's always a caveat, warning that unless a spat over sanctioned parts is resolved, flows will be tightly curbed. This is a difficult way to live. Why do we care? We've got a chart up there for TV and for you folks on radio comparing nat gas in the UK and Amsterdam and the United States. UK and Amsterdam, Caroline, you know this well, paying much more for nat gas than what we are in the United States.
I mean, once again, about a 20% move in natural gas prices over in Europe today. And it is notable that we're always seeing the EU talk about contingency plans, a 15% retract, on overall energy usage. What does that do to an economy when manufacturers can't pump out as much as they want, as the user base can't consume as much energy as they want, and what that means for recession risks, once again, Gina?
Yeah, well, speaking of manufacturers pumping out what they want, how about Tesla earnings after the close? I think we're all anticipating these numbers. Will they start to see deliveries improve? Will they start to see that manufacturing plant in Shanghai reopen? How much are the costs ultimately of the rebuild in Texas and Germany for Tesla? And importantly, will Elon finally come out with this so-called third master plan for the universe? So lots to look forward to this afternoon coming out of Tesla.
Well, what I think about with Tesla is I look at the valuations. This is still a growth company, but those top and bottom line growth rates, Gina, things that you guys always look at, they're slowing down. And I think about what this means, Taylor, as growing EV competition is out there. What's the right, correct valuation for Tesla going forward?
Good question, particularly with rates at least starting to rise. I know today we're on John the Day, but the simple math says if rates go up, present value has to go down. I still think, though, Tim, that for the most part, a lot of analysts still believe that Tesla is sort of the leader, and at least they've had a long runway to get ahead of before that competition tries to catch up a little bit.
Yeah, how have we talked about Tesla earnings without mentioning the fact that everyone's wondering what the future of Elon Musk and Twitter is? So I wonder if we're going to hear anything about that, Carol, in the earnings call today.
I would never bet against Elon, but I just think about, remember Apple, they came into the smartphone market later after everybody else, and look at where they are. All right, we got to run, guys. We're going to be back. More market coverage. Our countdown to the close will continue on TV, radio, and YouTube. We'll be back and Beyond the Bell later on.
You're listening to Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, everybody, you are listening to Bloomberg Business Week. Lots to think about. I am very keen in terms of what we hear from all of these big earnings. Tesla, United after the close. And Tim, how do we cross that with what the Fed is saying and what economic data is saying?
Yeah, really eager to hear from United about demand for tickets as prices and fuel has gone up. So we're going to be watching those closely. The earnings come out today, Carol, but the call not till tomorrow.
Yeah, that's a really good point. All right, don't forget, we're going to be back with our TV colleagues for more Countdown to the Close just about 30 minutes from now, and then Beyond the Bell at the 4 p.m. market close. You are listening and watching Bloomberg Business Week on Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening and watching Bloomberg Business Week here at Bloomberg. And Tim, what do you think about $5 a gallon gas? Maybe keeping it there, maybe even going higher.
All right, it's a supply-demand story, right? If it gets more expensive, are we going to use less of it? And is that going to be better for the environment? We've got a provocative column coming up next.
Yeah, I love this. You brought it to our attention. It's a great way to kind of talk about the global macro energy story that's underway today. First up, though, back to your top business stories and a check on the trading day. Here is Charlie Powell.
Thank you very much. We got the Dow all over the map on the minus side. Just 30 seconds ago, we had the Dow higher, but right now down 9. Choppy session down less than 0.1%. S&P up 17 right now. That is a gain of 0.5%. NASDAQ up 157, holding on to tech gains up by 1.3%. The NASDAQ 100 index up 1.3%. Another day of broad-based gains with the Russell 2000 up by 1.1%. Stocks, however, they are off highs as that rally in tech shares loses steam. Investors sifting through the latest corporate results. The dollar caught bids while the euro tumbled ahead of a confidence vote in Italy. So again, we've got the 10-year 3.03%, the 2-year yield 3.24%, spot gold down 0.6%, 17.01 the ounce, and West Texas Intermediate crude oil down 1.9%, 102.26 a barrel. Netflix shares up 6.7% right now as a million customer loss turns out to be smaller than some had feared. The streaming service is also expecting 1 million new subscribers this period. Geetha Raghunatham is a media analyst with Bloomberg Intelligence.
One key positive that came out of last night's report was that it looks like the subscriber base is stabilizing. We're done with the worst, most likely, in terms of subscriber losses. But then if you look at the third quarter guidance, it doesn't look particularly inspiring. But at the same time, management seems to have a better handle on what they're going to do to reinvigorate subscriber growth. And
again, Netflix up now by 6.9%. A ton of earnings after the bell. Most closely watched, perhaps, will be Tesla. Shares up now by about 0.9%, but also reporting CSX down 0.3%. The railroad, Alcoa down 1.5%. Discover Financial Services up 0.5%. UAL up 0.5%. Las Vegas Sands up 3.6%. Kinder Morgan up now by 0.6%. All of those names reporting after the bell. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, President Biden making some comments today about climate change and his policy plans in the absence of congressional action. And in keeping with that, Tim, Bloomberg opinion columnist Eduardo Porter making the point that if climate is a crisis, shouldn't we keep gas prices high?
Eduardo Porter joins us now. He's a Bloomberg opinion columnist with economic policy and immigration issues, joining us in the Bloomberg Interactive Broker Studio. Eduardo, it's good to have you with us. This is a provocative column because you're essentially saying that a bold move that President Biden could make is to find a way to put a $5 a gallon floor on gasoline prices, literally the opposite of what he's trying to do in his world travels to get, quote unquote allies to give us more oil.
Yeah. I mean, the specific number is not the issue, 5, 450, whatever. But what's important to note is that high energy prices, which include high gas prices, are going to be an essential component of any solution to climate change. I mean, if we want to reduce carbon emissions, we have to make carbon fuels more expensive. And this is an opportunity.
Okay, what if you said, just to push back on that a little bit, what if you said, okay, it's all well and good, but if President Biden were to do something like that, this is such a politically toxic issue that he would get just destroyed in 2022 and then 2024 at the polls, because this is the #1 issue that Americans care about.
Indeed, I feel for the guy. This is a real tough one. But any solution to climate change is going to be politically very, very complicated. I mean, we've been debating this issue at least since the Obama administration. And remember what happened to his cap and trade program. It just died in flames, didn't even get to the Senate. And we've been trying and failing ever since. So the question is, yes, there is a very big political cost to pay. But at some point, this argument needs to be made and needs to be turned into policy because there is no other real solution.
Right. Or I would go, none of this matters, right, if the climate continues to get warmer. I mean, just look at what's going on around the globe, right?
Yeah.
Like we debate about higher rates and margins and other stuff that's, stressing us all out. But if the climate continues to warm, we will have nothing to worry about because we will not be able to exist.
Yeah, well, indeed.
I don't mean to get so dark, but right? Like this is the crux of the major problem that faces the world right now.
Oh, right. I mean, just look at what's going on in Europe, across Europe just now. And,
Right.
and we've had versions of that in Australia, in the United States, and certainly in places like India and Bangladesh. I mean, the intensity of the climate emergency is amazing in terms of lives lost, crops lost, agricultural yields down, longevity shortened. I mean, the costs of this are extremely expensive, which is in fact what justifies imposing an economic cost to mitigate.
You cover Latin America, you cover U.S. economic policy, immigration, but I think about what Brazil did back in the 70s, right? They were brought to their knees because of the energy crisis, and they basically made themselves energy independent, right? Going into ethanol, sugar-based ethanol, right? They had to address it because they had to economically survive. The U.S. has, Europe has higher taxes when it comes to gases. What is it that how come the Europeans did that? And what is it that why aren't the U.S. doing it? Is it because we've had so much fuel and fossil fuel-based fuels that we don't have to? What is it?
Yeah, that's a big question. I mean, you can answer it in a variety of ways. I think, for one, Europe is much more welcoming of higher taxes than the U.S. is in any dimension, right? Whether it's taxes on energy, gasoline, or income taxes or whatnot. They pay a higher tax burden, and they accept it because they get a society that they like with that money. And the United States has always been much more hostile to that. Also, the U.S. has gotten used to very, very cheap energy for a long time. I mean, it's not just now that gas in Europe is more expensive. It's since I've been around, since I have memory, gas prices in Europe have been way higher than they are here.
Yeah, look no further than Norway, where we've seen gas prices above $10 a gallon, despite the fact that the country produces so much energy. Eduardo, before we let you go, you ran some numbers here. Talk about how this would spur innovation for alternatives.
I mean, well, basically what happens is the moment that consuming fossil fuels becomes more expensive, you'll have businesses and households looking for alternatives. One alternative is to use less energy, but another alternative is to find technologies that use different sorts of energies. And we've seen that. I mean, we see the amount of investment in renewable energies and in new technologies for, say, energy storage and whatnot is way higher. Precisely, I mean, it's also stimulated by government subsidies and so forth, but the prospects of much higher fossil fuel costs is driving this. I mean, you even have gas companies, energy companies that are going in to invest in nuclear fusion.
That's right. They know. Well, it's really interesting. And if you think that it's like, bottomless pits in terms of fossil fuels, Javier Blas has a great story on the Bloomberg talking about Saudi Arabia. They are the world's biggest crude producer, and they are nearing their ceiling when it comes to output, right? So it's going to run out. We know that, no doubt about it. We got to run. Come back. We loved it. So great to check in with Bloomberg opinion columnist Eduardo Porter.
Thank you.
All right, let's get to Washington, D.C. for a check latest world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. President Biden will be talking this afternoon about his plans to tackle climate change and the opportunities of a clean energy future. He's doing it at a repurposed coal-fired power plant in Somerset, Massachusetts. Bloomberg's Anne-Marie Hordern has more on his speech.
Used to be one of the biggest in the Northeast, and it's now a hub for some of these cables that are going to be needed for more than dozens of wind farms in the Northeast. And the president is going to say climate change is an existential threat. He's going to talk about some executive action, directing some funds to some of these communities that are hard hit.
Bloomberg's Anne-Marie Hordern reports the president will stop short, though, of declaring a climate emergency, but the White House says he will take other executive actions. Between inflation, the stronger dollar, and the political turmoil, more Americans are looking for a change of scenery in Europe. Bloomberg's Nathan Hager reports from the U.S. Capitol, Washington.
Sotheby's International Realty says requests from Americans looking to move to Greece jumped 40% this past spring compared to last year. A real estate dealer at Knight Frank says demand in France and Italy is the highest it's been in 3 years. Portugal and Spain are also popular destinations Americans are thinking of moving to. Relatively cheap housing and the rise of remote work have made the expat lifestyle more attractive. Many Americans say rising crime and political divisions back home also have them looking across the pond. In Washington, I'm Nathan Hager, Bloomberg Radio.
Italian Premier Mario Draghi has won a confidence vote today, but 3 of his coalition allies boycotted the vote, which means his unity government is likely not surviving. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nance, thank you so much. Nancy Lyons in our DC newsroom. So we've got coming up a story that's in Bloomberg Business Week, the upcoming new issue. It's also the Bloomberg Big Take, and it's about Sam Bankman-Fried. He's the crypto billionaire who tried to bail out ailing firms during the industry's implosion, and he recently was a highlight at the Bloomberg Crypto Summit that happened yesterday.
In this excerpt, he talks about the need for a healthy crypto ecosystem. Check it out.
We like it when markets are healthy and efficient and going up and stable, because that is, in the long run, what just creates more activity. How healthy the ecosystem is in the long run is going to be a very strong predictor of how much we can grow.
That was FTX founder and CEO Sam Bankman-Fried at the Bloomberg Crypto Summit. He was in conversation with Bloomberg Opinion's Matt Levine. You can check out more of that interview on the Bloomberg and at Bloomberg.com. Carol, he was there in person, which is really interesting these days because oftentimes when he joins these things, he joins them remotely. Lives in the Bahamas.
Okay, so interesting. I love what he had to say about the need for a healthy crypto ecosystem. I feel like part of the problem is I don't think we truly understand what the ecosystem is that needs to be.
Well, we understand the unhealthy elements of the ecosystem because of what happened in the first half of the year when it came to crypto.
Right.
The decline of this algorithmic stablecoin. And then, of course, the collapse of Three Arrows Capital and all of the companies that had lent money to Three Arrows Capital or had been financially involved, including crypto lenders like Celsius, and then also, of course, like BlockFi and Voyager Digital.
I feel like there's some other comments he made at the Bloomberg Crypto Summit yesterday that really mirror, I feel like, what was going on in the tech boom. He says, quote, profitability was sort of a dirty word for a number of years, and it has returned to investor parlance. There's been a substantial re-rating toward looking for at least likely or plausible pathway toward profitability being a core component of an investment thesis. Like, go figure. Remember when we were all chasing anything with a .com? Did it with cannabis. We've done it with different things. You got to make money, or you've got to at least show the route to profitability.
Yeah, at one point the blockchain was like that .com in the 90s.
Exactly, right? So anyway, check out, if you want to hear more of that interview, you can find that at Bloomberg.com. This is Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Choppy session. The Dow back in the green, up 20 points right now, up by about 0.1%. The S&P up 22, up 0.6. NASDAQ up 173, up by about 1.5%. Key takeaway, we're off session highs. Stocks pairing gains as a rally in tech loses steam and investors parse the latest corporate results. The case in point, Netflix up right now by 6.1%. After the bell today, we will be hearing from Tesla. Tesla shares advancing ahead of that report, up by just about 1%. Boeing shares are moving higher now. We've got Boeing up by 1.7% after a Dow Jones report said the plane maker is set to increase production of its 787 Dreamliner, citing a source close to the company. 10-year yield is 3.03%. The 2-year yield, 3.24%. Spot gold down $9 the ounce to $17.02, down 0.6%. West Texas Intermediate crude down 1.9%, 102.26 a barrel. Recapping the Dow, the S&P, NASDAQ, all higher. S&P up 23, up 0.6. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So the Bloomberg Big Take today, it's also a story in the upcoming new issue of Bloomberg Business Week out on newsstands tomorrow, already on the Bloomberg and at Bloomberg.com/businessweek. It's about the wonderkind quant turned crypto billionaire and his dominance and expansion in that crypto industry.
We're talking about none other than Sam Bankman-Fried of FTX. This story by Hannah Miller and Olga Karif, as Carol mentioned, it's in the upcoming issue of Bloomberg Business Week magazine. Check it out, though, at the Bloomberg terminal and at Bloomberg.com/businessweek. Hannah Miller is digital currencies and venture capital reporter for Bloomberg News. She joins us now on the phone from our Palo Alto bureau. Hannah, really great to have you with us. We've talked a little bit in recent days and recent weeks about the buying spree that Sam Bankman-Fried went on over the past couple of weeks as we've seen the crypto industry just collapse, or past couple of months, I should say. What are his intentions in helping prop up some of these companies and then buying them as well?
Yeah, thanks so much for having me. So it's been a really exciting time within the crypto industry, despite the market downturn. Sam Bankman-Fried has really spotted a lot of opportunities here to just consolidate power over the industry, whether it's striking deals with BlockFi or Voyager Digital. He is really, just spreading his influence within this space.
All right, remind us, for those who are like, wait, who is this dude? Because he really is a standout among those who are in this space, because he's worth a lot of money, right? He's probably lost some, but he's still worth a lot.
Yeah, he's worth about $10 billion currently to our billionaires index. That's about half of where his wealth was in April. Obviously still a lot of money. But he's 30 years old. He's taken the industry by storm. His companies, FTX and Alameda Research, have really asserted power within the industry. They work with a lot of top names. FTX is one of the most used crypto exchanges in the world.
So he's doing all of this out of the goodness of his heart, or does he just want to dominate and be the industry?
A lot of people within the industry see him as crypto's patron saint, that he is stepping in, bailing out companies out of the goodness of his own heart. But others see a business motivation here. He's really buying companies on the cheap. He is stepping in, he's helping out, but there's also a huge advantage in expanding his own business and gaining customers all over the world, particularly in the U.S.
Yeah, it's remarkable. There's a great infographic in here that really shows the web of companies that at this point are connected to FTX US, FTX, and then Alameda Research.
It's a lot, right?
All connected to Sam Bankman-Fried, yeah. I'm wondering more about what Sam is like. And we've had a lot of reporting around him and some profiles of him. But, I think for people who might have seen his conversation yesterday with Matt Levine at the Bloomberg Crypto Summit would see that he was wearing his signature shorts and a T-shirt, really dressed unlike anyone else there, which has kind of become, a signature for him. Tell us more about what he's like and who he is and how he got into crypto.
Yeah, no, Sam is always great to talk to. We spoke to him for this story. He is described by people as kind, nerdy, shy, a little bit awkward, but he really has a very calculating eye when he looks at the industry. He got into crypto trading a few years back, really sort of climbed the ranks in terms of trading performance with Alameda Research. And he really has become kind of a cult figure within the industry. And he's also pledged to give away most of his vast personal wealth.
I just love the shorts and the t-shirt. Hey, one thing I find interesting is that while he's spending and buying and looking to dominate when it comes to crypto, he's passed on some of the big flops as of late.
That's true. We have in our reporting that he spoke with Terra and Celsius about potential bailouts there, but he ended up passing on both. So it shows that he does have a discriminating eye here. He's not just bailing out whoever. He's looking for advantages. He's looking at how it can help him and his companies.
What about when it comes to Robinhood and his investment in Robinhood? Because this one's a little bit different than the other companies. A lot of the companies that he's invested in or been interested in, those have been in the private markets. But Robinhood, it's publicly traded, and wow, it has gotten beat up.
Yeah, no, we reported a few weeks back that he was looking into a potential takeover at Robinhood. This shows that he has his eyes beyond the crypto industry, that he's looking at sort of more traditional finance players. As one of my sources said, his ambitions know no bounds. So it's really exciting to see him look at other areas. He's even joked about buying Goldman in the past.
That is wild. Well, he wants to do bigger deals, it sounds like. Hannah, what is it that we need to understand about this individual? As the crypto space, still many who are knowledgeable, understand how it works, who are entrenched in this industry, say we're very early on in terms of the impact of the digital crypto world. So why is it that we need to keep an eye on him and what he does?
Well, I think with this current crypto winter, the industry is at a crossroads. A lot of people want a decentralized industry where power is in the hands of the people, that it's based on peer-to-peer transactions, but Sam's influence and that of FTX shows that there are clear centralized elements here, that there are major players to watch, and that they are going to have continued influence as this space grows.
Speaking of influence, you mentioned that he's been using his personal wealth, and he's also pledged to donate the vast majority of his personal wealth. What about when it comes to where he's putting his money politically right now? And if your reporting showed you at all what he's thinking when it comes to influence in Washington?
Well, in 2020, he was one of the top political donors to Joe Biden during the presidential campaign, falling right behind Mike Bloomberg. And he's already spoken about his commitments to donating to the Democratic Party for the upcoming election, particularly if Donald Trump runs again.
Michael Bloomberg, of course, the founder of Bloomberg LP, Bloomberg Philanthropies, and of course, Bloomberg LP, the home of Bloomberg Radio and Bloomberg Business Week. So I think this is your world. So what are you watching to see in terms of what he does next?
Yeah, so we already know, and we reported today that FTX and FTX US are looking to raise more funding, which is pretty interesting during this time because I've written a lot about how funding from venture capitalists has slowed when it comes to crypto. So he is definitely looking to expand. He has also spoken about buying assets from other distressed companies and even targeting Bitcoin miners.
Is there some nervousness, just got a few seconds left here, Hannah, that though there might be too much consolidation of the crypto world in one person's hands?
100%, especially considering that this is an industry that is supposed to be decentralized at its core.
It's kind of ironic. What a great deep dive. And it is, as we said, the Bloomberg Big Take. And of course, this is a story in the new issue of Bloomberg Business Week, which will be out on newsstands, but already on the Bloomberg terminal. And you can find it at bloomberg.com/businessweek. Hannah Miller, digital currencies and venture capital reporter at Bloomberg News, on the phone from our Palo Alto bureau. So cool.
Really cool. Follow Hannah on Twitter at HGMiller29. Again, at HGMiller29 is where you find her and her reporting on Twitter. Well, coming up next, we're doing our countdown to the close with our friends at Bloomberg TV. This is Bloomberg Radio, and this is Bloomberg Business Week.
to the Close, Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close. Just 60 minutes left in your trading session. Caroline Hyde, Taylor Riggs, Gina Martin-Adams, joined now by our colleagues Carol Massa, Tim Stenovic, as we do daily across audiences in TV, radio, and YouTube to dissect, well, the on-again, off-again risk tolerance of this market. And we're currently up 20 points on the S&P. So moving higher, just stealthily, Carol.
Yeah, again, kind of a choppy trade here. But once again, we're reminded that investors love their big tech names because tech is definitely the outperformer. The NASDAQ 100 moving above its 50-day moving average for the first time since April. And thank you, Amazon, for helping move the NASDAQ 100 higher. Amazon, I don't know if you guys noticed, it's on track for a 6th straight session gain, longest such streak since June. It is up about 12% over that time period, Tim.
Investors also loving cannabis companies today. Cannabis stocks moving higher after the Subcommittee on Criminal Justice and Counterterrorism scheduled a hearing essentially seeking to explore decriminalization of marijuana. This is MJ, ticker symbol, ETF, MG, Alternative Harvest, ETF. At one point today, it was at its best levels, or I should say having its best day since March, its best levels in more than a month.
I'm thinking of one guy who likes 420. I'm looking at, interestingly, SpaceX looks like it's releasing.
Caroline.
Yeah, thanks. SpaceX is inspiring toys, apparently, with Mattel. They're releasing SpaceX-inspired toys 2023. Who would have thought it? SpaceX and Mattel combining. Meanwhile, what's going to the moon? Not to the moon today, but we're going higher. S&P 500 up 0.5%, 21 points on the upside. Dow Jones flat, but we're back in the green, 13 points on the upside. NASDAQ, though, as you say, Carol, your outperformer of choice, up 1.5% for big tech. And we're seeing the Russell 2000 do some pretty heavy lifting, too. We're up 1.25%, Gina.
Yeah, but very suspiciously mixed results at the sector level, with certainly very strong growth performance, outperformance in discretionary and technology, but vicious underperformance for some of the former defensive sort of strategies in utilities and healthcare. You have to wonder if this is just a little bit of confirmation of yesterday's trade where investors are saying, okay, maybe I want to get a little bit more risky. I want to get out of some of those defensive segments like staples, utilities, healthcare that have performed so well this year.
You're seeing a little bit of that today. Take a look at some of the movers. A trio of downgrades here. Juniper, F5, and of course, Arista Networks were all downgraded by B of A this morning, saying that investor expectations are still not aligned with the deterioration in the financials. You have, of course, Juniper here under pressure by about 1.6%. Chipmaker ASML saying huge supply constraints, but Citigroup coming out and saying that visibility, though, still really strong into 2023. So that stock getting a boost. Netflix is one that we continue to talk about. Again, just more fallout from yesterday. It was flat this morning at the opening bell, and I got nervous. Uh-oh, did we erase all of yesterday's post-market gains? But it does indeed rebound today. And of course, Tesla, as we count you down to further quarterly results after the bell today. Caroline, when we think about production costs, COVID, SpaceX, toys.
So many things to be discussing. So much going on in the head of one Elon Musk. Meanwhile, let's look at what's going on in the head of our own John Authers. He's a great Bloomberg opinion columnist, but he had some great statistics coming out, drawing from the Bank of America survey, which we cited a lot yesterday in terms of saying, look, are we at basically peak capitulation? He actually looked under the hood a little bit more and said, look, according to asset managers in the survey, they're overweight bonds versus stocks, Taylor. And the last 2 times that happened, in 2020 and in 2009, the stock market lifted pretty nicely. So we got those in those nice little red circles for our radio audience, basically a chart showing that, well, when you go long bonds, according to asset managers, it's time to buy stocks.
Well, and it's interesting, right? Because this is what we want to see. We want to see negative, like everybody just throwing in the towel and really kind of hitting bottom in terms of sentiment. And that's when we typically say, okay, we're near bottom. But isn't it kind of funny that every day we have somebody from Wall Street, some major firm kind of weighing in on whether or not we've hit market capitulation? Taylor, you talked about the Bernstein call today. They basically disagree with Bank of America that stocks have seen capitulation. Everybody's weighing in. We have a comment from Tracy McMillan, head of global asset allocation strategy over at Wells Fargo and Company. She told Bloomberg Radio earlier that the rally was premature. We will see capitulation. We will see value coming back into the market, but we just think it's too early in this bear market, really too early in the Fed's tightening cycle to call the all clear. I think it's when we start to see, Tim, maybe the Fed in commentary during their rate decision days start to say, well, maybe we're coming near the end of this rate tightening cycle that maybe we can start think about a bottom?
Yeah, like I said yesterday, I got quite a bit of feedback from listeners when we talked about hitting capitulation because at this point,
how active they are?
yeah, I know. They're getting in touch on IB and they're saying, look, you know, the Fed is still raising rates. It hasn't started cutting rates. We're still seeing jobs added to the economy. So there are a whole host of reasons. I mean, are we even at peak inflation at this point? So, but again, this is what makes a market.
Well, I think that's a really good point because the missing ingredient for this so-called capitulation is we've always been able to see the sentiment capitulate and the Fed swoop in to save the day. And we don't have that Fed save. And so that's why I think you see all this hedging commentary saying, okay, yeah, maybe we're seeing some capitulation, but we can't have any confidence because we can't rely on the Fed, frankly. Nobody's talking about that, but I think that's kind of the reality of our situation. No Fed put.
Gina, you rightfully brought up yesterday, though, about how forward-thinking this market has become. And I think maybe 20 years ago, it wasn't thinking 6 months out the way how efficient it has become today and the way that I wonder if we're looking through that hiking cycle and looking forward to 2023 already.
Oh, they're always wishing time away. Meanwhile, though, I'm not trying to wish time away, but it is later today that we do get some of these key earnings. And I think that's what we want to keep on digesting in the moment is what about the CEOs? Are they seeing any peak anything? Are they seeing demand draw back? Or in fact, as we keep seeing time and time again, they're saying that demand's still pretty resolute. It's more the cost pressure that we're trying to weather at the moment.
You know what's interesting too, Caroline? I was checking out our Markets Live blog, and it said that online data is showing that companies are putting the brakes on job listings for a third month. So it could be a sign that those Fed rate hikes, partly aimed at cooling wage inflation amid this red-hot job market, are starting to work. So if we start to see some weakness, Tim, in that labor market, maybe things are starting to slow down.
All right, well, we get numbers from United Airlines in addition to Tesla and others after the bell today. Eager to hear from the company about demand being affected, Gina, by these higher prices for tickets and to what extent that's, of course, eating into margins like we heard with Delta last week.
Yeah, and really a nice microcosm as to what's happening with the consumer. What is the consumer appetite to pay these higher prices? Because that is certainly the straw that may break the economy's back, is at some point it's just too much. And we know that the consumer wants to travel this summer, but will they continue traveling once the kids get back in school, once the fall ensues, prices are still high then, what's that going to mean for profits?
Well, your BI team and the analysts, of course, covering that has come on TV and joined us saying that, you know what, the consumer's been pushed enough. We're actually right at that point where you're starting to see on some of the travel sites that capture maybe the more price-sensitive consumer, they've sort of said, okay, enough is enough. We've sort of maxed out on what price hikes we're willing to accept at this moment.
Did you guys see, speaking of price sensitivity, the story about that Americans that can't afford homes here, so they're moving to Europe?
To Greece, 40% increase in interest on Sotheby's in realty because you want to go to Greece from America.
What you can get for 60,000 euros, you can get a compound.
Good thing we're global.
I know.
New economy.
All right, we got lots more to talk about. We're going to come back in less than an hour's time. Our cross-platform coverage, we call it Beyond the Bell. We're going to count you down to the close on radio, TV, and YouTube on this Wednesday.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening and watching Bloomberg Business Week on Bloomberg Radio. Carol Masser, Tim Stenovic. We're also live on YouTube. We can see you. You can see us. Hi.
Hi, I'm thinking about travel. We got United Airlines. Yeah, we got United Airlines after the bell today. We have tickets to come back from Cincinnati.
I thought you were driving.
We're driving. Well, we were planning to rent a car and drive the way there because we have this kind of triangle, Western New York planned. And we have tickets to fly back. But what we've decided to do is just drive the whole thing because flights, we can change our flight, no problem, and get credit with the airline and use these tickets for Thanksgiving perhaps.
Yeah.
But it's just become such a headache to be in these airports that we're saying, okay, we'll do a 10 to 12 hour drive instead of trying to brave a Cincinnati to Newark flight.
There's also the risk, especially if you're going to see family, there's the risk of catching COVID along the way. We know from our experiences.
That's what we got last time we went to Cincinnati. We got COVID.
Just saying. So you think about that and you're like, okay, I know people who came from London visiting family and one of the persons got COVID and they had to hide away for a few days. So it's something to think about. Yeah, you got to kind of figure it out. Aren't you thinking about, though, what it's going to cost gas-wise?
Yeah, but,
it's safer.
I'm thinking about what's going to occupy a 3-year-old in the back seat for that
got
long.
some videos going?
Where they're getting loaded on the iPad as we speak.
All right, coming up, though, folks, we've got lots to come. Don't forget, we do have Tesla and United Airlines after the closing bell, those earnings. We're going to be breaking it down right here on Bloomberg.
Let's get to Washington, D.C. now for the latest world and national news. For that, we go to Nancy Lyons. Hey there, Nance.
Thanks, Tim. President Biden is in Somerset, Massachusetts, where he's been outlining steps he's taking to confront climate change. He's vowing to steer federal dollars to communities that have been ravaged by the heat for cooling centers and air conditioners.
Right now, 100 million Americans are under heat alert. 100 million Americans. 90 communities across America set records for high temperatures just this year, including here in New England.
President
as
Biden
we speak.
President Biden says climate change is an emergency, and he will continue to see it that way. He says it poses a clear and present danger to everyone. Ukrainian First Lady Olena Zelensky appealed to Congress today as Russia's war with her country edges closer to its 6th month. Speaking through an interpreter, she says First Ladies usually talk about humanitarian efforts.
Maybe you expected from me to speak on those topics, but how can I talk about them when an unprovoked invasive terrorist war is being waged against my country? Russia is destroying our people.
Ahead of today's speech, First Lady Zelensky's husband, President Volodymyr Zelensky, said he expected significant results from her meetings in Washington. Demand for mortgages fell to a 22-year low last week as higher interest rates and inflation are crushing those who are looking to buy a home. The Mortgage Bankers Association reports applications for loans to buy homes fell 7% last week as interest rates have nearly doubled since January. The national average interest rate for a 30-year fixed-rate mortgage jumped 8 basis points last week. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Nancy Lyons there in D.C., our 99.1 newsroom in the nation's capital. So we're going to talk a little bit about Apple in just a moment. We did see shares hire a couple of stories that caught our attention, including one by Orion Vlastelica, which takes a look at analysts, their coverage of Apple specifically, and what they are saying, and it's a negative tone.
Yeah, by the way, just check out Ryan's byline on the terminal
So
and
cool.
at Bloomberg.com because she's got some great reporting around why stocks are moving on a particular day. Watches those analyst notes really quickly. Here's his latest. Analysts covering Apple are cutting their share price forecast. More of them are doing this. And that, Carol, like you said, is signaling growing concerns about an economic slowdown that could hurt the sales of its products. It's why we saw on Monday the entire market turn around after Mark Gurman broke that story about Apple.
It's kind of crazy. We're going to get into this. Actually, Apple's one of my gainers today when we check in with our TV team at 4 p.m.
Still a
Wall Street
gainer?
time. I think it still
Okay, I'll
is
check
because
for you.
we did get a story overnight about Apple's iPhone shipments likely surging in June in China. So
Still up 1.6.
yeah, so I'm just like, I feel like it's a mixed bag. So Wells, Fargo, and Morgan, the latest to lower their price targets on the company. We've seen a drumbeat of brokerage firms that have recently reduced their stock forecasts ahead of the company's quarterly results slated to be released next week. So I feel like it's tempering their forecast on the share price. It doesn't mean they're like, we hate this company all of a sudden.
Right.
It's just maybe adjusting it because of what we might see from the economy, the global economy.
Okay, so what are some of those challenges? Rising interest rates, not just here in the United States, but around the world. I mean, look what the Bank of Canada, Bank of England are doing, ECB too, slowing economic growth and soaring inflation. Apple also facing supply constraints related to COVID restrictions in China, Carol.
Yeah, I mean, and this is something that we're seeing broadly on the tech sector and many companies that play internationally and globally. So I don't know. We'll have to wait and see. This company reports next week, so we will know fully how the business is doing and what it has to say about the outlook.
Okay.
Having said that, we're just going to tease a little bit that Mark Gurman has a story about another business where Apple's like, yeah, we got this, basically, right?
Yeah, I'm not going to tell you what it is.
Nope. This is what we call, folks, in the broadcast world, ATs. Stick around. This is Bloomberg.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks higher, lots of moving parts, ton of earnings after the bell. Let's head right over to the first word breaking news desk for today's afternoon call. And here is Bill Maloney.
And good afternoon, Charlie. U.S. stocks in the green in choppy trade today, with the Dow currently up 84 points. S&P's gained 30, while the NASDAQ is up by 1.7%. The U.S. 10-year yield at 3.03%. Gold is down 10. Energy is in the red. And Bitcoin trading higher by 2%. Among the main 11 S&P sectors, leaders were consumer discretionary, tech, and telecom. Healthcare and utilities were in the red. And leaders to the upside in the Dow, Salesforce, Disney, and Nike. Merck and UNH led to the downside. After earnings, Netflix rose 6%. Biogen fell 6%. And in other news, the Italian government is on the verge of collapse as parties refuse to back Draghi. Wrapping things up, Tesla reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill Maloney, and to hear live breaking news over your Bloomberg type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much. Well, we mentioned that Apple shares are trading higher today. We also mentioned a story on the Bloomberg about how more analysts covering Apple are cutting their share price forecasts, signaling growing concerns about an economic slowdown that could hurt the sales of its products, meaning that maybe there could be some slowdown in some of their metrics. But our Mark Gurman also has another story on maybe a side of the business that could help propel the top line growth and bottom line growth.
That side of the business being healthcare. Mark Gurman is technology reporter for Bloomberg News. He joins us on the phone from LA. Mark, whenever I see Apple and healthcare, I think back to the Walter Isaacson biography of Steve Jobs, because over 10 years ago, before Steve Jobs died, he told Walter Isaacson that healthcare was an area that needed to be disrupted. Is Apple finally doing that?
Well, he also told Walter Isaacson that TV is also an area that needs disruption.
Good point.
You've seen everyone but Apple successfully do that. But to your point, Apple put out a 59-page report today outlining basically everything it's done in health. So the first 4 pages sort of give you a high-level overview of what they've done, what features the phone, et cetera, have health-related and fitness-related, of course. And then every other page they use to detail the exact feature. It's like they put out this war and peace-sized guide to everything they've ever done, basically saying, hey, look at all the stuff we've done in health. Anyone who says we haven't done something, well, if you think that, you just read this and we'll tell you that you're wrong, right? At the same time, there is concerns if they've done enough, if they've done the right stuff, if they've done impactful things, right? So there is a discussion to be had there.
All right, so help me out. If I go through the balance sheet of Apple, is there a breakdown when it comes to healthcare and how they've been able to monetize it?
Nope. If they had
note my sarcasm.
Yeah, no, I know you were being sarcastic. No, they don't break down any of that stuff on an individual level. Individually for anything health related, right? Those features are bundled into the cost, I guess you can say, into the iPhone and into the Apple Watch. There's no health related subscription. They do, however, have Fitness Plus, which is their, I believe, $5 a month fitness service that you get on the Apple TV, the phone, or the iPad, the Mac. Actually, I don't know if they have it. They don't have it on the Mac. On most Apple devices, and that's they charge for, obviously, so they make some money there. Certainly not their most popular service, but it's certainly working. I would say it probably makes them, I don't know, $500 million, $750 million a quarter. So that's still nice, but no, nothing on the balance sheet on health.
Well, Mark, when I think about Apple and its foray into healthcare thus far, I often think back to the marketing that the company's done about with regard to privacy and the idea of like what happens on your iPhone stays on your iPhone. And I'm wondering to what extent you think that those two things are related. We're going to be more likely to give Apple our data about our bodies if we trust the company.
I think it's a chicken and the egg thing, right? What comes first? Was it that Apple started doing all these things and then they needed to have this privacy angle to make people trust it? Or did they start with the privacy angle and see look at all the things we could do if we have trust of consumers? It doesn't really matter, but I think in this current day and age with everything going on, Roe v. Wade, and people, hacking other people and, concerns about government intervention in people's devices, I think the privacy standpoint is critical. to Apple's health efforts.
At the same time, you walk into a Dwayne Reed or a CVS or what have you, and there's tons of blood pressure monitors. There's all different types of monitors. I mean, it's a big industry, and I do think in some way, wouldn't it be nice to have perhaps an Apple device that can measure so many different things, especially for an aging population. We're all getting older here in the United States. It's a huge market to have a device that, you know, increasingly, you know, doctors want to see some kind of trend report, you know, when it comes to really important health metrics.
I don't know the answer to this question,
yeah,
but I would say that it's probably a smaller than expected number. How many people do you think take their blood pressure once a week? How many people do you think check their glucose
My dad
level?
did every day, but that was an
Right.
older population.
But I'm wondering though, Mark, what if you didn't have to actually take the time to do those things? What if your
Exactly.
iPhone did those things for you just in the background?
That's my point. So there's really three sensors that you want on an Apple Watch to really make this thing a real game changer. You want a temperature reader to know your temperature. You want a glucose reader, and you want a blood pressure reader, right? You also want it to cure illnesses, but that's never going to happen, right? But you want those three sensors. And phase one of that's going to happen this year, where they add body temperature. They'll advance that and improve that in the coming years. I think in 4 years from now, actually, I reported this already. They're trying to do blood pressure in 2024, 2025. And then I think you'll see glucose by the end of the decade. And so I think by the end of the decade, 8 years from now, you'll really want get everything you pretty much want from a health perspective on the Apple Watch. So
All right, so are they a major force in the healthcare world? I know your headline or the headline on your story says that. Are they?
Are they? They are, in the sense that they have done more than all these tech companies from a consumer standpoint. But if you look at Amazon, they have their healthcare clinics, right? They also have their pharmacy business online and their pill pack, you know, competitor and all that there too, right?
Yeah.
So Apple has a long ways to go. And I think that certainly there's more to do. But if they are able to get those three sensors nailed on the Apple Watch, I think they're the winner here, especially from a tech company perspective.
So glad we had time, or you had time for us. Mark Gurman, thank you so much. Technology reporter at Bloomberg News on the phone from LA.
All right, we got some breaking news here. Ford planning to cut as many as 8,000 jobs in the coming weeks. Shares of Ford still higher by about half a percentage point. Our reporting showing that staff reductions target salaried jobs. People familiar with the situation say the cuts to come primarily in unit-making gas-powered vehicles. Remember, Carol, they did that, you know, separation of the traditional Ford internal combustion and then the EV unit, and the company's CEO aiming to boost profitability amid a push into that EV market.
Ford not commenting on the speculation, but it does talk about the shift to alternative fuel and alternative fuel vehicles. Tim did mention shares of Ford are higher, but they're definitely off their best levels of the session, still up about 0.6%, but we're seeing a little bit of a dip on that news. You are listening and watching Bloomberg Business Week on this Wednesday, July 20th. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So I don't know if you've noticed, but biotech stocks, they have been on a tear. They're up more than 20% in the past 1 month.
I hadn't noticed, actually. I'm glad you said
Did
that.
your voice just go up?
Yeah, because I'm genuinely surprised about that. Fortunately, we've got a great guest coming up in just a couple of minutes, a biotech healthcare specialist.
Is it Bobby Brady, like whose voice went up, right?
All right, we got to get to Charlie Pellet because we've got less than a half hour to go. Hey there, Charlie.
Well, hello there, and maybe I should just cue the song "Rescue Me." We've got the Dow, the S&P, NASDAQ all higher right now. 28 minutes to go with the S&P up by 29, higher by 0.8%. The Dow up 69 points. It has been a volatile day. We're up now by 0.2% on the Dow. NASDAQ tech stocks where the action is today. A move higher for NASDAQ, 205 points higher right now, up 1.7%. NASDAQ 100 index also up 1.7%. Russell 2000 up now by just about 1.6%. 10-year 3.03%. The 2-year 3.24% on the 10-year. On the 2-year, I should say, spot gold $1,700 even the ounce on gold right now. And West Texas Intermediate crude down 1.9%, 102.26 a barrel. Natural gas, big story today, rallying 8.8% on nat gas, 7.90 per million BTUs. Stocks pushing higher in a volatile session as investors parse the latest corporate news and the potential for geopolitical risks in Europe. Ford is preparing to cut as many as 8,000 jobs. This, according to sources, those cuts coming in coming weeks as the automaker tries to boost profits to fund its push into the electric vehicle market. Shares of Ford pushing higher now by about 0.7%. Tesla will be among the companies reporting earnings after the close of trading today. Alex Webb is a Bloomberg opinion columnist.
So they're going to have a huge amount of wiggle room because of the situation in China, where they have this factory in Shanghai, which was shut down for quite an extended spell during the quarter. And so they will be able to point towards that as a kind of restriction on their supply. Now, we saw, I don't want to compare Tesla too much to Apple, but if you look at Apple and other electronics companies who are saying, well, we have supply issues, but the demand remains there, and it's highly likely Tesla will be able to tell the same sort of story.
And Tesla shares, they're up now by just about 1%. Lots of other companies reporting earnings after the close of trading, including CSX, Alcoa, Discover, United, Las Vegas Sands, and Kinder Morgan. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I thought Charlie was going to sing from the Brady Bunch, but we didn't get it.
I don't know if we have the rights to that song.
Yeah, I guess not. All right. Checking out shares of Biogen. They're down about 6% in today's trade following an earnings update this morning. The company dealing with generic competition, and yet, Tim, it did boost its guidance for the year overall.
Let's get into it with Mike Perrone, Managing Director and Biotech Healthcare Specialist at Baird. Mike, this afternoon, joining us on the phone from New York City. Mike, how are you?
I'm great, Carol and Tim. Thanks for having me on.
Yeah, thanks so much for joining us. Okay, we've had a few hours to dig into these results. Give us your takeaways from Biogen.
Yeah, so like most biotech stocks, clinical, regulatory, and strategic updates tend to be more important than quarterly earnings performance, and I think that's what you're seeing here with Biogen today. So Baird biotech analyst Brian Scorney, in his preview note for Biogen last week, pointed out there's two main issues that investors are focused on with Biogen, and that's the CEO search, and that's also their Alzheimer's pivotal readout of lecanemab, which is expected in the fall. The lack of positive updates or positive commentary on any of these two seems to be trumping what otherwise was a really nice beat and raise by Biogen. So
interesting. Yeah, no, it's really interesting that those two things are not actually are outweighing a beat and raise quarter from the company.
Yeah, and I'd also say, if you take a look, you are seeing some general weakness in the larger commercial biotech stocks today, as we're seeing kind of a shift, as you mentioned, the biotech boom. You're seeing a shift from the relative safety of those cash-flowing large biotech stocks into some of the riskier areas of the biotech.
Well, so wait. So are you saying that there's some overall biotech industry trends that are weighing down Biogen today, or are you saying Biogen is weighing down the overall industry?
Yeah, Carol, I think it's a little bit of column A and a little bit of column B. The performance from Biogen on their earnings was strong. It's just really those two issues which need to be resolved. And there wasn't a whole lot of updates on the CEO search, and for the pivotal Alzheimer's readout, which is expected in the fall, the company did point to a broad range of potential outcomes there, which I think, based on conversations with investors, may be taken as a slight negative.
So help us out here. What kind of CEO is needed for Biogen at this point? Like, I just remember years ago starting out, when you talked about biotech, it was just like the upstarts, and it's a lot of times there wasn't a lot of there's a lot of top line growth maybe, but not a lot of bottom line growth. It was tricky. I mean, this is a $30 billion market cap company. So how do we think about these companies, and what kind of CEO is needed to take this company into its next phase?
Yeah, I'll have to leave most of the commentary on Biogen going forward to our great biotech analyst, Brian Scorney, but certainly needs some strong leadership there as far as some of the stumbles over the past few years. But I guess I'll leave the rest to we can touch base with Brian down the road.
What about when it comes to the Alzheimer's drug, which you pronounced so correctly and Carol and I have struggled with for months?
Yeah, I think it's a similar mechanism to Aduhelm, which we know how it worked out, but it's a highly powered study. So the fact is that if there is an effect, they powered it enough to have it have some positive readout. But again, the commentary today that they gave was somewhat pointing to a broader range of potential outcomes.
All right, so you are a biotech healthcare specialist, so I'm just curious when it comes to the advice that maybe you give to your bigger, broader team, is biotech a group that you think investors need to be considering at this point, and where specifically? As I mentioned, it's up about 23% over the past month, so that's quite a bump to the upside. I know there's been some deal flow, once again, and when you think about biotech, you always think about the big pharma companies where they are looking for growth in particular. So what's the investment play, Mike, in your view, at this point when it comes to biotech?
Yeah, the big question a lot of investors have on this rally is this a bear market rally, or is this something that's more sustainable? And I'll say Strategas, a Baird company, did some really good macro research on historical kind of biotech bear market bounces, and they tend to be very strong and very quick. So it's a possibility that that's what we're seeing here, and it could fade over time. But I'll tell you, our fundamental research team, the Baird Biotech research team, did note in their weekly a couple weeks ago that short covering, which drove a lot of the initial stages of the rally, can actually lead to institutional buying as people start having fear of missing out. Did I miss bottom? The stocks are still largely cheap. I mean, as much as we bounced off bottom, the XBI is still down roughly or a little bit over 50% from its peak in February of 2021. So we have seen some inbound calls from clients that suggest that there's some real work being done. It's something that's changed over the past few weeks. And you've also seen some fund flow shift where biotech was bleeding fund flows out for much of the year. And over the last month or so, we've seen some pretty positive inflows there, which means there's some real buying in biotech and could prove that this is more sustainable.
Biogen could be one of your decliners today.
I know. I was choosing between Biogen and
You were?
Baker Hughes, JB Hunt. There's a lot that are down. I'm going to add Biogen though.
Okay, good stuff. All right, we got to run. Thank you so much, Mike Perrone, Managing Director and Biotech Healthcare Specialist at Baird, joining us on the phone in New York City, although he's typically based in Milwaukee.
Well, let's get to Washington, D.C., I should say, for World and National News with Nancy Lyons. Hey, Nance.
Thanks, Tim. President Biden says if Congress isn't going to do anything on climate change, he will. He says he views it as an existential threat and a code red for humanity.
That's why today I'm making the largest investment ever, $2.3 billion, to help communities across the country build infrastructure that's designed to withstand the full range of disasters we've been seeing up to today. Extreme heat, drought, flooding, hurricanes, tornadoes.
Biden spoke today in Somerset, Massachusetts at a repurposed coal-fired power plant. He says his administration will speed up the process for new offshore energy in the Gulf of Mexico as well as the Atlantic. Boris Johnson signed off in his final appearance as Prime Minister in the UK's House of Commons today.
Mission largely accomplished. For now. I want to thank you, Mr. Speaker. I want to thank all the wonderful staff of the House of Commons. I want to thank all my friends and colleagues. I want to thank my right honourable friend opposite, Mr. Speaker. I want to thank everybody here, and hasta la vista, baby. Thank you.
Boris Johnson encouraged the next prime minister to keep close ties with the U.S. Conservatives have chosen Rishi Sunak and Liz Truss as their two finalists to succeed Johnson. Italian Prime Minister Mario Draghi appears set to fail and fall after 3 key parties failed to support him in a confidence vote. Draghi's resignation would plunge the country into months of political turmoil. The premier won a confidence vote late today with 95 senators voting in favor, 28 against, but the ballot had little significance because 3 members of his unity coalition boycotted the vote. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Yeah, you put the word rat in a headline here at Bloomberg, and we're going to read it. And I don't mean like, oh, you dirty, stinking rat. I'm thinking about like the rats that we see in New York City subways.
Yeah, you got to read this story by Brendan Case. 6 months after a Family Dollar distribution center in West Memphis, Arkansas was fumigated and more than 1,000 rodent carcasses were removed, the rats are back.
They are indeed. David Hernandez spotted 3 of the animals before 9 a.m. one recent morning. Devisha Silas found some dead rats wrapped up in rugs. Randy Washington said she often finds rodent droppings.
Quincy Washington said, quote, they didn't get all of them. We should say the 4-year-old employee distribution center. It's located across the Mississippi River from Memphis, Tennessee. Washington continuing, quote, you smell rat feces and urine.
All right, Brendan Case writing the story. The rats befouled products and plagued workers throughout 2021, eventually prompting a safety alert from the U.S. FDA and a recall of goods at Family Dollar stores in 6 states. The FDA is still investigating. Family Dollar, as you know, of course, a unit of Dollar Tree, is facing lawsuits from customers and the Arkansas Attorney General. Ew?
Yeah, I think so. In May, Dollar Tree said it would permanently close the West Memphis warehouse. It opened back in 1994. The company determined that the aging facility was incompatible with its goal of, quote, running our business in the most effective and responsible way, the spokesperson said. That shutdown, Carol, it's happening, but not until October.
Yeah, to be fair, Dollar Tree said it's focused on the well-being of its employees and improving conditions at stores and distribution centers. A spokesperson for the Virginia-based retailer saying, quote, we are committed to providing every associate in every Dollar Tree facility with a safe and healthy work environment. To also be fair, Dollar Tree, not the only deep discount retailer accused of poor working conditions in an industry known for very slim profit margins. Dollar General has had a long history of federal workplace safety violations.
Yeah, that's according to the U.S. Labor Department this month, accusing the company of blocking exit routes at a Pennsylvania store and cramming too much merchandise into the aisles.
In New York City, rats just eat pizzas.
That's true. Fair.
If you don't know what I'm talking about, Google rats and pizza.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Gold back below $1,700 the ounce. Gold falling to the lowest in nearly 16 months. Right now, we've got spot gold at $1698.25, a drop today of about 0.8%. The Dow, the S&P, NASDAQ all higher. 13 minutes to go ahead of the closing bell, with the S&P advancing 26 points, up now by about 0.7%. The Dow up 71, higher by 0.2. NASDAQ is up 189, up by 1.6%. 10-year yield 3.03%. The 2-year yield 3.25%. West Texas Intermediate crude down 1.9%, 102.26 a barrel. Natural gas, big story today, surging 8.8%, 790 per million BTUs. So it is an up day for the Dow, the S&P, and NASDAQ as investors sort through the latest corporate news. After the closing bell, we will be hearing from Tesla. Tesla shares ahead of that report up now by 1.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg Editorial Board. The stock market does an excellent job of serving one group of retail customers: active traders who like to pick their own stocks. Wholesale brokers love to take their trades. In return, they offer better prices and even pay for the privilege of fulfilling the orders. The latter practice, known as payment for order flow, enables the commission-free trading that has helped fuel the meme stock craze. The Securities and Exchange Commission is considering changing all this, a move that might curb the craziness and very slightly benefit other investors, but that is hardly worth the blowback it would generate. Given all the SEC's other priorities in areas such as crypto regulation, climate change risk, and derivatives disclosure, this battle is best left for another day. This editorial was written by the Bloomberg Editorial Board. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, let's get to it. We've just got about 10 and a half minutes left in today's trading session, getting ready to wrap up that Wednesday trade. And we've got a new guest with us for the Drive to the Close.
Kirk McDonald is portfolio manager at Argent Capital Management. They've got approximately $3.3 billion in assets under management. Kirk joining us on the phone from St. Louis. Kirk, how are you?
I'm doing great, and thanks for having me on the show, Carol and Tim.
Yeah, it's good to have you with us. Help our investing audience understand where the market is right now. There's this debate going on internally and externally about capitulation. Where do you fall?
So thanks for the question, Tim. And as far as capitulation goes, so the market, had a horrible first half. In the mid-cap area where I work, it had its third worst first half since the inception of the Russell mid-cap benchmark in 1991. So while capitulation may or may not be upon us, when the market is down 21.6%, like the Russell Midcap is, it's just an opportunity for investors like us. So at Argent Capital Management, we're looking to invest in the right company with positive change. And that huge drawdown in the market for us is positive change. We can pick up some companies we've been looking at for a long time at a much lower price.
I love the mid-cap space. We don't really talk about it a lot. I feel like it gets lost, certainly between the big and small caps. But if you look at it, if I'm just looking at the S&P mid-cap 400, it's down about 15% this year. S&P 500 down almost 17%. And then, of course, the NASDAQ 100 still, down more than both of those indices. How do you think about it? And is a lot of it kind of a U.S. play here?
Yeah, so the mid cap space where I play is really just like anything that gets stuck in the middle, it gets forgotten about, and people don't talk about it, and they don't.
It's like those
allocate
middle
it.
children. Ask one of my sisters and
Hey,
brothers.
come on. I'm considered a middle child.
They forget our
I didn't want to
birthdays.
pick on the middle child because I never know who might be listening and if they might get upset. But not having to live through the middle child syndrome myself. But yeah, so with mid-cap stocks, one of their advantages is they tend to be less exposed internationally than large-cap stocks. So in the case of, we're in right now with the dollar strong and the U.S. economy in a better position, although, it's a tenuous position, it's better than some of the international economies. The mid-cap stocks have a good opportunity here right now to do a better job growing earnings relative to the rest of their competitors.
Where do you think we are in terms of recessions right now? Because I'm looking at your notes that you sent to our producer, Paul Brennan, and I'm having a hard time understanding, where we are in this economy. We've got mortgage rates spiking, and of course, we've got demand falling for homes, but they're remaining expensive. We've got energy prices just skyrocketing and inflation the highest it's been in 40 years. Yet the workforce is, still adding jobs. So where are we?
Yeah, so right now where the economy is, it's still not technically in a recession whatsoever. And the way we invest here at Argent Capital, we're really bottom-up stock pickers, looking for the right company with positive change. But we do take into account a little bit where we are in the market cycle. We try to be 1/3 invested, for the current market cycle, which has been an expansion phase lately. So that involves more value type of stocks. But the next phase, should it be a recession, would it be more of the steady growers, the companies that can grow their earnings regardless of where we are in the economic cycle.
Right.
We keep 1/3 of the portfolio exposed and ready for that type of a change in the cycle. So that's really how we look at it. We're not going to change how we invest based on are we going to have a recession or not. We're prepared for either scenario.
Right. So, and you look, like you said, bottoms up. So you're looking at names specifically, and you have brought a few with us to chat about. One is the ticker is LNG. We're talking about Cheniere Energy, based in Houston. Stocks up almost 34% so far this year. I get it, like the energy play, but they are very much involved in the infrastructure part of it, right? The pipelines.
So Cheniere isn't the pipeline. So really what they do is they create the liquefied natural gas. So they build these huge expensive projects. They cost $1 billion or $2 billion each.
The terminals,
natural
right?
gas.
Yeah.
Yeah, the terminals.
Right.
So it is delivered by pipeline.
Yeah.
So they are more of the infrastructure play. You're exactly right. So they charge their customers a combination. It's based on the Henry Hub price of natural gas plus a liquefaction fee. So they do make more money if the price of natural gas goes higher, but they're really the play on the fact that in this case, Europe, and that's the change that we were looking at, is now needs to switch their natural gas supplier from Russia to other sources. And the United States is a natural play for that. We're a very reliable supplier, one of the biggest producers of natural gas. And Cheniere Energy is the world's largest producer of liquefied natural gas.
All right, what about Zebra Technologies, ZBRA? It's a mid-cap stock. It's not one we talk about a lot here, and you argue that that's to your advantage.
Yeah, that is absolutely to my advantage. And Zebra is a long-term holding of ours. So they're the largest producer of barcode scanners and printers in the world, and also RFID tags for tracking inventories. And the positive change for Zebra has been really this move to omni-channel retailing. So we like to buy things, and I do it every single day on my phone. I get it delivered in a day or two, or I sometimes drive by the store and pick it up, in the parking lot. And they now produce software that enables retailers to do that omni-channel retailing. And also, they produce software and the tracking technology for the distribution centers that all of the online retailers and now the omni-channel retailers are increasingly building as well. And Zebra, really is not well known, but it's around us every single day. And I guarantee you, most of us will come in contact with it 2 or 3 times a week, but have no idea.
Especially as I do my self-checkout. No, but I'm curious, though, why is it down so much? 50%, almost 50% year to date.
Yeah, so Zebra really is down almost in sympathy with the rest of the tech sector, which was the worst performing sector in the Russell Midcap in the first half of the year.
Yeah.
And it's down largely in sympathy with that sort of a
It's down a lot more, though, wouldn't you say?
It is down more, and part of that is I think it had a huge run towards the end of last year. Okay. And what I saw with some of the stocks in my portfolio and in the market in general, the names that had a huge run up at the end of last year were the worst performers early this year. But at Argent Capital Management, we really look to own companies for the long term. We have very low turnover, about 20% a year. So we're not as concerned with the fact that Zebra stock price is down. What we're looking at is the quality of that business right there, and that the positive change to omni-channel retailing is going to continue. So Zebra really has a tailwind for sales growth going forward.
I was just counting, it's up 754% from the end of 2015 through the end of last year. So it has had quite a run, so you're right. All right, we got to run. So good to check in with you. Thank you so much. Kirk McDonald over at Argent Capital Management. All right, we've got just a few minutes left in today's trading session. Bouncing around, we're off our highs and lows of the day, but we're ready to head over to our TV colleagues, ready to do Beyond the Bell, our cross-platform coverage, counting you down to the close on this Wednesday on radio, TV, and YouTube. And again, we're green across the board, but let's see, a few minutes left in today's trade.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
We are about 2 minutes away from the end of the trading day. Caroline Hyde, Taylor Riggs, Gina Martin-Adams counting you down to the closing bell. To take us beyond that very bell, it's a global simulcast as always. Carol Massa, Tim Stenovic. We go cross-platform, TV, radio, YouTube too. Well, in anticipation of Tesla, in anticipation of some big earnings, we digest what has been pretty volatile, but pretty, in the end of the day, risk-on kind of day, Carol.
Yeah, it definitely feels that way, and we are looking forward to seeing what Tesla has to say. I've been looking at some of the software names, definitely some outperformance in terms of the broader market, up more than 3% here. Not seeing necessarily any real news, but I do have a gainer where there was a call on a name, and maybe that gave some support to those software names.
It's interesting, Caroline, you mentioned that it's been kind of a choppy path to get to this gain that we're seeing today, but not exactly broad-based, and quite a difference from what we saw yesterday, though we are still seeing, Gina, volumes higher than typical over the last 20 days.
Volumes higher, but not a lot of breadth in this market, as Richard Bernstein just characterized for us. The sectors certainly very concentrated gains. In the growth sectors, the defensive sectors actually selling off. A little bit of mixed results, really. Even though the market's up, it's certainly not, it isn't a feel-good market.
And he talked about that, this sort of addiction to technology that we're kind of going back to, but sort of long-term, how does that play out, Caroline, in sort of a maybe more of a broader-based rally that is a sign of a more healthy market?
Yeah, at the moment we're looking at 1.5% higher on the Russell 2000 and at least a 1.6% gain on the NASDAQ, with volumes, as you say, up some 14% versus your average. And we are seeing about 335 gainers on the S&P 500. Not nearly the 400 and so that we had yesterday, but today at least more gainers than losers, that's for sure. 23 points, let's call it, on the upside on the S&P 500. That's 0.6% higher. The ringing of the bells happens, and the NASDAQ is really your outperformer today. Big tech doing the big push up higher, 1.6% higher, 184 points to the upside. The Dow Jones is your laggard. We're only up about, well, less than 0.2%, 51 points at 31,878. And let's pull out, because there we see actually the real hard work put in by the Russell 2000, 1.6%. Not too many fears of a localized recession in that number at the moment.
It's always the little guys, right, that are really like carrying it out. Speaking of volatility, which we saw a fair amount in today's session once again, but you don't necessarily see it in the VIX. The VIX actually down about 0.75 point, 23.76, Taylor.
And you see that, Carol, when you talk about sort of how broad-based it was, maybe not as much as yesterday, but there's actually some green outperformers, even in, quote, some of the worst sectors, right? So that sort of gives you a feel of sort of the overall tone of this market. Feels pretty risk-on when it's semiconductors, NVIDIA, I know is one big top maker here, media, software services, technology, those are all anywhere from 1.25 to about 2.7% higher on the day. In the worst performers, there are still some green, but I'll take you down to the bottom, pretty much like the staples, sort of a classic risk-off, right? Food and beverage, utilities, household products, those are some of the laggards on the day. You're off about 1 to 1.8%.
All right, so let's get to some of the specific gainers in today's session. We talked about this. You guys talked about it a lot after the close yesterday. Netflix, investor community saying, okay, subscriber loss not as bad as expected, but let's remember, it's still subscriber loss, so we'll see what the long-term story is. But nonetheless, the short-term story on this Wednesday is investors moving into Netflix, up about 7.5% in today's trade, top in the NASDAQ 100 and the S&P 500, still down more than 60% so far this year. Apple, a ton of news in today's session, up about 1 1/3% in today's trade. More analysts covering Apple are cutting their share price forecasts, signaling growing concerns about an economic slowdown that could hurt sales of its products. Then you had Apple's iPhone shipments likely surging in June. We got that news out of China overnight, China specifically, that news was. And then Mark Gurman coming out a story with Apple saying, yep, we're all in when it comes to healthcare. And that stock is up about 18% since mid-June, but still down for the year. And then I mentioned a call on some of the software names. Atlassian, ticker is Team. This stock up more than 11% in today's session. This is an outperform rating by Bernstein, specifically initiating coverage and a price target of $257 and change, guys. The stock closed at $213 and change, so some move to the upside there, Tim.
All right, you got the gainers, Carol. I got the decliners today. Let's start with Elevance Health. You might not be familiar with it, but it's the company formerly known as Anthem. The name change has gone through, finishing the day down 7.6% today. Shares plunging at one point, the most in 2 years. Medical costs failing to decrease in line with rival United Health, which reported better results last week. And Baker Hughes warning that supply chain delays for everything from computer chips to chemicals have worsened, and that hurts the oil field contractors' ability to fulfill orders. Shares falling by more than 8.2% today. The shares did drop as much as 14% earlier, but bounced off of those lows to close just over 8%. Baker Hughes also saying that some of its industrial operations in Europe are bracing for disruptions as the reliability of Russian natural gas deliveries are in question, so they could see power failures there. And then Biogen shares finished the day down by 5.8%. We just had on our air Mike Perrone, who's managing director and biotech healthcare specialist at Baird. He talked to us a bit earlier to break down these results. He said that even though the company reported better revenue that declined less than expected and raised its guidance for the year, it was a beat and raise quarter, a lack of commentary on a couple of things, including its CEO search and lack of clarity about its Alzheimer's drug, sending shares lower today.
Meanwhile, of course, healthcare was kind of the sector most beaten up today, which wouldn't have thought that you were getting out of defenses, would have thought, therefore, that it was kind of a risk-on day, but you didn't really see that played out in the FX market. I go cross-asset for our radio audience. I'm looking at, well, dollar strength, the dollar index rising once again, up 0.2%, and that means we have a weaker euro to the tune of 0.5% ahead of ECB. But I know we have some breaking news, Taylor.
We do. We have just some preliminary numbers right now, Caroline. Tesla's second quarter revenue, $16.9 billion. That's about right in line here with analyst estimates, looking for $16.88 billion. The second quarter update letter is out, so we're going to swiftly read through that. I believe here, well, I'm going to have to search through these numbers. At least for now, that's the headline. I think we're going to be sifting through, of course, all of the numbers that we get within this letter, which I don't really want to do on the fly. But we do have, Caroline, of course, bottom line, much better than expected. Second quarter adjusted EPS of 227. Yeah. The estimate on the street was for 183. Still looking at 50% average annual growth here in some of those vehicle deliveries.
Yeah, I'm looking at the letter now, and they say there were growth in vehicle deliveries, increased average selling prices, say growth in other parts of the business, total revenue up 42% year on year in the second quarter to that 16.9 billion figure. They're talking about profitability. Their operating income, they say, improved year on year to 2.5 billion in the second quarter, resulting in a 14.6% operating margin year on year. Operating income was primarily impacted, of course, by the average selling price rising, growth in vehicle deliveries, profit growth in other parts of the business, lower stock-based compensation expenses, always interesting. But they do talk, of course, in the negatives, higher raw material, commodity, logistics, expediting costs, higher per unit fixed costs. In Shanghai in particular, Carol, they talk about negative FX impact, always notable with this US dollar strength. Bitcoin impairment, Carol. We have to remember this is a company that has on its balance sheet Bitcoin.
Right. This is something we've been wondering about. I've been looking at the live blog, and our team has been wondering about that initial investment that they made and what's the erosion on the Tesla financial balance sheet. So we're getting some clues on that. I think what's one of the key metrics certainly is that the company's still seeing 50% average annual growth in vehicle deliveries. This to me says it's still a growth company. We'll see what Wall Street ultimately says. Right now the stock is up 3%, Tim, in the after hours.
Yeah, getting some commentary too on the factories. New factories in Berlin, Brandenburg, and Austin continued to ramp up in the second quarter. The Gigafactory Berlin-Brandenburg reached an important milestone, over 1,000 cars produced in a single week. The company also saying we are focused on a record-breaking second half of 2022, Gina.
Yeah, and certainly that news on the factories ramping up is very good news for the market, in addition to just this general delivery outlook. Tesla's had a couple of rough quarters, so it looks like this is a potential turnaround quarter. Can it continue is going to be the question that I think analysts are asking, and I'm going to watch those estimate revisions for the next couple of quarters to just see how sticky this beat really is.
Interesting, at least for now, touting some of that increase in profitability. Again, sort of a better than expected top and bottom line. Caroline, maybe not a first derivative, but maybe a secondary derivative effect we look at. Converting about 75% of their Bitcoin purchases into fiat. And of course, we're talking about that cash, of course, on their balance sheet, adding to it. And so maybe that's a little bit of a boost here.
Yeah, we'll see how many of these companies that have put Bitcoin on the balance sheet continue to navigate it. They continue to experience import delays, they say, for solar components in particular. It says it's expanded the supplier base overall. We're really seeing the market sort of climb after hours as the profit beat, as we expect shares, though, of course, to be relatively volatile amid all of this. We've got to go back to the idea that, of course, we were hearing from Tesla CEO Elon Musk talking about a super bad feeling around the economy. Was he guiding the market lower when it didn't necessarily need to?
Well, and what's fascinating, right, when you think about this kind of company, you think about where are the growth opportunities, and Tesla expecting to further increase its Shanghai production rate. This is an important metric for this company as it builds out the business specifically. So I want a little bit more color on that, but right now the color we're getting from investors, stocks up more than 4% Tesla shares in the after hours. All right, that's going to do it for our cross-platform coverage, radio, TV, and YouTube. We call it Beyond the Bell. Folks, we will see you again, same time, same place tomorrow.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, so our big story here at Bloomberg at this hour, Tesla in the after hours, up 4.4% here in the after hours following its latest update. Another headline just crossing the Bloomberg, second quarter free cash flow, $621 million. That's a little bit light. 625.2 is what Wall Street was looking for.
Okay, I got a take for you, Carol. Look at Bitcoin. It's falling into negative. It's falling to the negative for the day after Tesla said it was taking an impairment on Bitcoin.
That means they bailed out of it?
Well, they
cashed out?
Well, they cashed out some of it. 75% is what Caroline said. So,
okay, ladies and gentlemen, as you can see, I was trying to sell for several hours at the point 101.84, but I don't want to hold it overnight, so I need to sell it, well, in the next, let's say, 45 minutes. I will try to place stop to sell at 101.82 or even 80. Yeah, I'm going to place an order, and I'm placing its stop loss. I'm placing at 101.80. Okay. Okay. In this case, we will have we're already in profit, so we will have profit 3,400 pounds. Okay, guys. Nice trade. So let's see. Hopefully, we will close this trade because I don't want. We trade on margin, and if you never traded before on margin, it means we invest not much money, but we control quite large market. And overnight, if it's long position, broker charges for overnight charges. So that's why when we place short order, if you can see, we hold short positions. Broker pays us, so we don't lose in this case. If it's long position, it means we will have to pay overnight charges and broker charges. Because one pip equals 100 pounds, over calculations, it's not really worth it to keep for really long time overnight positions. Okay, guys? So order placed. Please change your order to 101.80. And let's see if we will be able to sell at this level. Okay, guys? Stay safe.
On air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much. Nancy Lyons with World and National News. Right now, when it comes to business news, we are all in on Tesla. Shares up 3.6% here in the after hours. Company just a few minutes ago reporting its latest quarterly update. And some of the headlines, the company saying that second quarter free cash flow, a little light, $621 million versus $625.2 million. Expects to further increase its Shanghai production rate. And I think it said something about June being, I missed that headline, it was here, and June, the highest vehicle output month ever.
Yeah, so a good sign for people worried about supply chains, right?
Yeah. How are they doing it? Is it just because they're the big player like Apple?
How are they doing it?
And they can get the access to the things they need? Right, we saw it with Apple too. They get to the stuff they need.
And I wonder about adjustments that the company's made in order to be able to pull it off, right?
Yeah.
Some other numbers here. Automotive gross margin for the second quarter coming in above estimates at 27.9%.
That's a good one.
That is a really important figure. Estimates were for 26.8%, so quite a beat there, Carol. We're going to be speaking to Ross Gerber from Gerber Kawasaki in just a minute, and I bet he's pretty excited about that number.
Yeah.
The company also saw continuation of manufacturing challenges on shutdowns, and the company's in the process of ramping production at its Megapack factory, too.
Also, our Dana Hull, who covers Tesla, you know it very well, reports. It's a must-read here at Bloomberg. She puts on our MLive, or our live blog on Tesla. It's all about the second half of the year, and here's a quote. With each of the Fremont and Shanghai factories achieving their highest ever production months in new factory growth, we are focused on a record-breaking second half of 2022. Folks, you wanted Outlook? There's Outlook.
All right, there it is. The company also says the pace of production ramps at Austin and Berlin will be influenced by the successful introduction of many new products and manufacturing technologies and new locations and ongoing supply-related challenges. We're going to get some commentary and I'm sure questions from analysts about that.
What new products?
I don't know. Was it going to be the Cybertruck finally?
Or the robot?
No, you're so excited about the robot. What do you think the market is for the robot? That's so funny.
Would you like to have one at home? Hey, robot.
I don't know.
Go do the laundry.
I don't know. I'm kind of scared
Please take
of
the
it.
dog for a walk.
We don't have room for an extra
It's
body.
just a person in a bodysuit. All right, we're going to talk more Tesla. Stock's up 2.5% in the after hours. Cannot wait to check in with Ross Gerber. He's coming up in just a moment right here on Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Our Tesla coverage continues, recapping, resetting on Tesla. Shares after hours up now by about 2.7%. Tesla reported second quarter earnings that beat Wall Street estimates, reflecting the company's progress in getting production back on track while tackling supply chain hurdles and COVID lockdowns at its factory in China. Second quarter EPS $2.27. Estimates were for $1.83. Second quarter revenue $16.9 billion. Estimates there, $16.88 billion. Lots of headlines. Tesla saying June was its highest vehicle output month ever. Also, Tesla saying it converted about 75% of its Bitcoin purchases into fiat currency. Bitcoin now trading lower. Bitcoin down by 1%, 23,066. But again, a Tesla beat after ours. Tesla up now by about 2.7%. Our Tesla coverage will continue with more on the electric vehicle maker coming up in just a moment. S&P today up 23 in a choppy session, up by about 0.6%. We had the Dow Jones Industrial Average up 47, a gain there of 0.1. NASDAQ up 184, higher by 1.6%. 10-year yield 3.03%. Spot gold down 1%, $16.95 the ounce. Again, Bitcoin down 1.3% now. West Texas Intermediate crude down 1.9%, $102.26 a barrel. Recapping, Tesla after ours up by about 2.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
So let's get right to it with somebody who is a Tesla owner and investor, well known to our audience. We're talking about Ross Gerber.
Ross Gerber is president and CEO at Gerber Kawasaki Wealth and Investment Management. He joins us on the phone from Santa Monica, California. Ross, pick out one number in this earnings report and tell us why it's your favorite.
Earnings per share. Earnings per share. They beat by a big number in a very, very, very tough environment while they're ramping 2 factories, and boy, they really killed it.
Okay, that number, $2.27, Ross, for the second quarter. Estimates were for $1.83, so blowing it out of the park when it came to that bottom line.
Yeah, and it's like so hard with supply chain and all the issues with China, and here they come out with a huge margin on their vehicles with the ramp. I mean, it's just they executed amazingly well.
So how are they doing it when so many others seem to be struggling?
Well, there's a couple things that Tesla has as a huge advantage over other automakers. And it first started when Elon went out and cut supply deals with like lithium companies and battery cell companies. He already had the vision of like, we want 10-year contracts. We want guaranteed supply. Like, he went all in and did like huge deals with these suppliers early on before electric vehicles were even an issue. So he kind of gets the priority because he makes the most cars and he committed the most early. And so he has the best position. Plus, they're completely vertically integrated. So they really have an advantage over other players in the EV space.
Why aren't we seeing shares jump more if the bottom line beat was so good, if automotive gross margin came in so much higher than expected? Shares in the after hours are only up 2.3%.
I don't really look at after-hours trading as any indication of too much, but we haven't had the conference call yet, and so that's usually where a lot is discussed that may change the trading in after-hours. You know, I think the most important thing is the valuation of Tesla is very high relative to the market, so they need to have good earnings to support their stock price and such. So either way, the stock's going to be up tomorrow, and I think that's great news.
What's the important valuation metric to watch? I mean, I'm just looking at basic PE is almost 88 right now, forward-looking PE of about 63. What is the important metric to look at when we're trying to value something like a Tesla, which most would argue is still a mega growth company?
Right. So we value all companies based off their PE to growth ratio. So that's really what's important, is how fast is the company growing relative to its PE. And that's really where you can get stock price appreciation, because you see this multiple will be forced in a way lower as E goes up if P doesn't go up. So P usually goes up when E goes up. So the nice way to look at it is...
Okay, guys, I'm going to stop. I'm going to place an order
well over 100%
to
of earnings,
sell
E is less than 100. So
euro against United States dollar at price 101.76.
What's the question that you would have for executives on the call today?
Okay.
Elon Musk, if you were able to ask a question, what would you ask him?
Just 1 second.
Well, most importantly, I'm
Order
what's happening in Berlin and Austin as far as the
101
with production and what's going on with the
76.
ramp.
Let's see if I'll be able.
Hiccup.
No, I am not.
I'm really concerned about technology also for full self-driving and
Let's play 77.
and it's getting better and better. But
yep, broker allows me to sell at 101. Place stop loss at 101.77. Okay, order placed, and let's see if I'll be able to sell at this price.
He's a big.
Stay safe, guys. I'll speak to you later.
And it showed him the vehicle turning right down the wrong way down a one-way street. I'm sure you saw that video, Ross.
Yeah.
How much better is it getting? Because that's pretty bad.
I think that I've seen like so many humans just today do stupid things like that. It's really like hard to be a perfect car while you're.
You do live in LA.
So that.
I'm a Californian, so I can say that.
And then I chain my car in LA, and it's super hard. It's super hard to survive in LA. So I think the expectation that a computer will have a flawless driving ability when it's still a beta, and then you get on the road and you watch humans like kill each other on the road daily. We're setting two standards. You see what I'm saying? And so full self-driving is never going to be perfect.
Well, that's what
somebody's going to get run over.
That's what I want to ask. Ross, is full self-driving crucial to the Tesla story, or can it just be a great EV car maker and that's enough?
Well, it's crucial to the story if you think about it, that making an EV isn't a challenge for Tesla anymore. So Tesla as a company, where would they evolve to if they were just an EV maker? Because eventually everybody's going to be making EVs and it'll become a commodity.
Well, there's the human robot. There's the human robot that I'm kind of obsessed with.
But that's all about AI, though. That's not really about, like, building a robot isn't hard. It's about making a smart robot that can do good stuff, And so, so the future is the software. And I think you should look at it very much like Apple. The Samsung phones are just as good as the Apple phones, or better. Okay, the Google phones are just as good or better. But we all use iPhones because of the software, and the way the software interacts with our life keeps us involved with Apple forever. And that's what Tesla's building with the software that the other companies don't have.
Right.
So when you're talking about an EV being a commodity in 10 years, it will be.
Got it.
But the software is where the value is.
All right, we got to run. Ross, always informative and fun to catch in with you. Ross Gerber over at Gerber Kawasaki Wealth joining us from Santa Monica. This is Bloomberg.
Okay, guys, that's great. We close our position. As you can see here, we entered position, we sold short at 102.14, and we sold at 101.77. Okay, great trade. 3,700 pounds in our pocket, say from 5 o'clock until about in 4 hours. Okay, guys, great trade. Well done, all of you guys who decided to copy this trade, who followed my trades. Good for you. You made quite decent profit today. If you want to get the strategy, you can go to company.co.uk and get the strategy. Also, I can provide webinar. You can find as well webinar and register for the webinar. It will be this month. And otherwise, you can stay with us. And this channel working not 24/7 from United Kingdom from 8 o'clock until 10 o'clock evening, from 8 o'clock in the morning. So copy our trades, stay with us, follow me, and try to make decent profit. Okay? Stay safe. I'll speak to you later, guys.
And this stock is down about 3.4% in the after hours. Looks like second quarter adjusted EPS, that's a big miss.
Yeah, coming in at $1.43 versus estimates of $1.88. We're going to talk about this with George Ferguson, Senior Aerospace, Defense, and Airlines Analyst in just a minute. First, though, Charlie Pellet, a lot of after-hours action.
Indeed,
Give us an update.
Indeed, I'm focused on Tesla. That's the big story. Tesla shares higher after hours. It did report second quarter earnings that beat estimates, reflecting the company's progress in getting production back on track while tackling supply chain hurdles and COVID lockdowns at its factory in China. Among some of the standout numbers, second quarter revenue, $16.9 billion, estimates for $16.88 billion. Second quarter adjusted EPS, $2.27, the estimates there, $1.83. Now, Ross Gerber is CEO at Gerber Kawasaki Wealth Management. Moments ago here on Bloomberg Business Week, he told us he is very much focused on that EPS number.
Earnings per share. They beat by a big number in a very, very, very tough environment while they're ramping 2 factories, and boy, they really killed it.
And shares after hours up by 2.8%. Moments ago, we heard from UAL, United Airlines, second quarter operating revenue, $12.1 billion, estimates $12.01 billion. We are looking at UAL shares trading lower after hours, down right now by just about 2.5%. We'll have more with our George Ferguson coming up in just a moment. Stocks rose in a volatile session today as investors sorted through the latest corporate news. We had the S&P up 23 points today, a gain of 0.6%, up again. The Dow higher by 47, up 0.1%. Nasdaq up 184, up by 1.6%. 10-year yield 3.02%. Spot gold down $15, trading below $1,700 the ounce at $16.96, down 0.9%. Crude, big story today, down 1.9%, 102.26 a barrel. But perhaps a bigger story in the energy market, natural gas surging 8%, 7.85 per million BTUs. Recapping, S&P up 23, up 0.6. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, copy, Charlie. Thank you so much. So United Airlines, we mentioned, just out with their latest quarterly update. Second quarter adjusted EPS, a big miss. In fact, missing by 45 cents a share, $1.43 versus $1.88 the estimate. Stock down 2.7%. Many metrics to get to, and someone who tells you about the metrics you need to care about is our own Bloomberg Intelligence Senior Aerospace, Defense, and Airlines Analyst, George Ferguson.
George joining us on the phone from the Farnborough Air Show in the UK. George, we really appreciate you taking the time, especially as it gets pretty late there, to join us on this. We haven't given you much time to go through these earnings, but investors not really liking the second quarter adjusted EPS coming in a little light. Estimates were for $1.88, but they came in at $1.43. What are you watching in this report?
Yeah, so thanks for having me on. We're going to watch very closely CASM, cost per available seat mile, especially I guess fuel.
Can you explain that metric? It's a really important one when it comes to airlines. It's like the metric.
Yeah, it's like everything except for obviously fuel expenses. So it's going to be labor costs, landing costs, maintenance costs, all that stuff. But labor is what we really care about, right? We watched Delta give all their employees a 4% raise. We know the airlines are generally pretty inefficient right here. They've hired a lot of new people. They're trying to train them. That's costing them a lot of money and making operations very sloppy. And so we saw Delta give us a prediction of like a 22% increase in CASM-ex in Q3. And so that stuff we get very, very worried about because, if they can't keep those costs under control, they're just going to have a harder time being profitable, right? And so we know operations are really rough right now. So we watch that very closely. Yields are what we're watching very closely too, right? United doesn't typically do as good a job with fares as Delta does. And so, United has more of an international footprint. We know that international has been coming back. We want to know how good it is coming back. We want to see those international yields. We also know they're feathering in business yields, which should be better. So we're going to want to see how the yield development is, what it is year over year, and especially compared to 2019. I think those are the very big two. We kind of already know fuel. We know it's up about 100% year over year, and a big challenge. So those are what we're really watching closely in this.
All right, we do want to update our listeners and viewers on YouTube because right now shares of United are down almost 6% here in the after hours. Help me out, George, because I feel like we have talked ad nauseum about how everybody's tired of buying stuff and they want to get out on planes and they want to travel. That's what people want to do coming out of this pandemic, although we're not out of the pandemic, but nonetheless, it's in demand. I've certainly done a lot more work travel than I have in the last 2 years. Is it right now good to be an airline, or because of higher costs, higher labor costs, energy costs, it's really tricky?
I think it feels like they're working really hard and not making the return they ought to make, right? And so one of the other things we'll look as well is we'll look at what capacity they think they're going to fly compared to 2019 in 3Q. Delta brought those numbers down to 85%. A lot of the airlines told us to be darn close to 2019 levels in Q3. Why? Because operations are so sloppy right now. So, look, as we think about the airlines right now, again, they're training a lot of people and they're working really hard to produce capacity darn close to 2019 levels, but not making the profitability. And so if you're an airline, I think you probably feel very frustrating, right? And again, as an analyst, I think when you get close to 2019 levels of capacity, you ought to be able to give me that kind of profitability. And I think it's just very, very frustrating for them. But this business has gone from a more even 4-quarter business. It was never really even, but it become a lot more concentrated in Q2 and Q3. So they kind of surged in the highs and then they relax in the shoulder months. It's really hard to do that as a business.
Bunch of headlines. You mentioned CASM. There's also TRASM and PRASM. United Airlines expecting third quarter TRASM sequential improvement versus the third quarter of 2019. They expect third quarter total operating revenue increase of 11% versus the third quarter of 2019. I do think about we're now starting to, what happened in terms of pre-pandemic sees third quarter capacity down about 11% versus 2019. That's worrisome, correct?
Yeah, so what they're just telling us, they're not going to get to 2019 levels in 3Q. It sounds to me like they're bringing down those levels. They know the operational challenges. TRASM is total revenue per available seat mile. It's a little bit akin to fares. Okay. And what they're telling me is they're having record fares, but we know that fuel is at record prices.
Here's one more.
If fuel comes down, it could be a gain there.
All right.
Fuel comes down, it could be a gain.
Here's one more outlook. Fourth quarter capacity. United Airlines sees fourth quarter capacity down about 10%. Fourth quarter down about 10% versus 2019. So that explains maybe what they're thinking about for the second half. Stock still down about 5.3%. George Ferguson, amazing.
George Ferguson, Senior Aerospace, Defense, and Airlines Analyst for Bloomberg Intelligence, joining us on the phone from the Farnborough Air Show in the UK. So we got to get him back, Carol, to talk a little bit about what he's seen there because it's return.
Yeah, Delta also down about 2% in the after hours.
All right, watching those stocks. Let's watch the news, too. Nancy Lyons in Washington, D.C. Hey, Nance.
Thanks, Tim. President Biden, speaking in Somerset, Massachusetts this afternoon, said he is taking steps to confront climate change. He's vowing to steer federal dollars to communities ravaged by the heat to use for cooling centers and air conditioners.
Right now, 100 million Americans are under heat alert. 100 million Americans. 90 communities across America set records for high temperatures just this year, including here in New England, as we speak.
President Biden says climate change is an emergency, and he will continue to see it that way. He says it poses a clear and present danger to everyone. Between inflation, the stronger dollar, and political turmoil, more Americans are looking for a change of scenery in Europe. Bloomberg's Nathan Hager with the story.
Sotheby's International Realty says requests from Americans looking to move to Greece jumped 40% this past spring compared to last year. A real estate dealer at Knight Frank says demand in France and Italy is the highest it's been in 3 years. Portugal and Spain are also popular destinations Americans are thinking of moving to. Relatively cheap housing and the rise of remote work have made the expat lifestyle more attractive. Many Americans say rising crime and political divisions back home also have them looking across the pond. In Washington, I'm Nathan Hager, Bloomberg Radio.
Italian Premier Mario Draghi has won a confidence vote today, but 3 of his coalition allies boycotted the vote, which means his unity government is not likely to survive. And British Prime Minister Boris Johnson appeared before Parliament today and said his goodbyes. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy Lyons, thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C. So we've talked about Tesla, that stock rallying in the after hours. We've talked about United Airlines, that stock selling off in the after hours. And then there was another story that caught our attention earlier on the Bloomberg.
Yeah, this one breaking late yesterday. Kathy Wood closing down one of her ETFs. The first time her ARK Investment Management has pulled the plug on an ETF. It's shutting down its ARK Transparency ETF, ticker CTRU. Carol, it's not even that old. It launched at the end of last year.
Yeah, that's a really good point. With holdings like Teladoc Health and Spotify Technology, the fund aimed to invest in companies that received high scores on transparency. ARK saying in a statement that Transparency Global, which shaped the fund's underlying portfolio, will stop calculating the index at the end of July.
Here's the release, what they said in the release. Quote, while ARK investigated alternative index providers, it did not find a suitable solution and decided to close the fund.
Yeah, it's interesting. Fund gaining only about $12 million in assets since inception. So put that against a fraction. It was
That's
a very
just
small
tiny
fraction.
amount.
Yeah.
Not even just for Kathy Wood, especially for Kathy Wood.
Yeah, exactly. I mean, they've got $9 billion in their flagship innovation fund ETF. So it was a rare passive vehicle. Remember, she's actively managed ETFs. This was a passive vehicle from ARK, and their active offerings have really boomed in popularity. We saw that in a big way during the pandemic, where she and her team really handpicking stocks that they saw shaping the future of finance, healthcare, and other industries. So it's been a tough year, a tough environment.
Let's talk a little bit, speaking of the environment, about EVs. Carol, you brought this story to my attention by our own Colin McCurricher about how EVs are starting to cover more ground than their gas counterparts. I love this metric here.
Yeah, it's interesting. So in Norway, battery electric vehicles now drive more miles annually on average than cars running purely on gasoline or diesel. Very special place.
It is a very special place. Gas is very expensive there.
Right, you said $10 a gallon.
Yeah.
That would make me move to an EV pretty
Despite
quickly.
the fact that they produce so much oil. I mean, look at their sovereign wealth fund.
Which goes back to the story that we talked about earlier by our Bloomberg Opinion columnist about maybe we need to keep gas prices high to help with that conversion.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Tesla shares now trading little changed as traders weigh a murky outlook. Tesla did report second quarter earnings that beat Wall Street estimates, reflecting the company's progress in getting production back on track, while tackling supply chain hurdles and COVID lockdowns at its factory in China. The other big story out of Tesla after hours, sold a significant chunk of its stake in Bitcoin, an investment that helped legitimize the world's largest electronic currency. We are seeing Bitcoin now moving lower after hours, down 0.5%. Bitcoin, 23,196. Turned out to be an up day, a volatile session on Wall Street today. The Dow, the S&P, and NASDAQ all advancing, with the S&P up 23, up by about 0.6%. Stocks regaining surer footing in a choppy session, with the Dow up 47, up by about 0.1%. NASDAQ up 184, up by about 1.6%. 10-year yield 3.02%. Spot gold down $14 the ounce, $16.96 now on gold, down 0.9%. West Texas Intermediate crude down 1.9%, 102.26 a barrel. Natural gas up 7.8%, 783 per million BTUs. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Great roundup, Charlie. Thank you so much. A lot going on and all covered there. Hey, last time she was on, we mentioned that Bloomberg Intelligence had put out a report last summer, I think it was August of 2021, about how the plant-based foods market could make up to nearly 8% of the global protein market by 2030, with a value of over $162 billion, up from almost $30 billion in 2020. So there's a lot going on in the space, but it's not just food.
I got to turn my microphone on, Carol.
It helps.
There's a lot going on in here, too. I'm not turning on my mic. Elizabeth Alfano is the CEO of VegTech Invest. She's got the Eat V ETF. We're going to talk plant-based innovations as well. She joins us via Zoom from Los Angeles. Elizabeth, good to have you back with us. How are you?
Carol, hi, Tim. Great to be here. It is wonderful in Los Angeles, even though we continue to have the volatile market.
We're going to work on getting your mic up. We're having a little bit of an issue hearing you. I do want to talk a little bit about, though, Carol, while we work on getting that mic up, the urgency, which I think a lot of people think about when it comes to making changes in our own lives as a result of what's going on in the world right now. We haven't talked much about it today, but the heat wave that we're seeing across Europe right now and much of the United States makes me think a lot about not just cutting down on how much I'm driving and what I'm doing, but also perhaps changing the way that I'm eating.
No, exactly. And it impacts a lot of different, certainly, industries or things that we tap into or buy into in a regular basis. Elizabeth Alfano is with us, CEO of VegTech Invest, the advisor to the VegTech Plant-Based Innovation and Climate ETF, which is up about 5% in the past month. She is with us via Zoom from Los Angeles. Hopefully, maybe proteins and plants can help us with technology, because sometimes it's tricky, Elizabeth, as you well know. So tell us a little bit about what you are seeing. What I'm really particularly interested in is flows into your fund. Is the momentum there among investors to tap much more into kind of the plant-based space?
Yeah, I love this question. What we're seeing now is that people are generally freaked out about the market as a whole. But the interest in the fund, so people saying, okay, I understand buying on the dip and that things are low now, and I can see a secular trend in front of me. It's not just Bloomberg Intelligence run by Jen Lefascis from Bloomberg, who's so great, and put out that report that you noted before our interview, but it's also a Boston Consulting Group report that says that the plant-based industry is going to go to $290 billion by 2035. That's going to be 11% of the global meat market, and that they determine that plant-based innovation is 3 times to 20 times more impactful of an investment as compared to building alternative energy.
Elizabeth, we unfortunately, and we know our audience can't hear you clearly, and we're going to try and get a better, cleaner line so that we can definitely get everything that you're saying. We're going to hopefully get back to the CEO of VegTech Invest, who's been joining us. But it is an industry I think about. I think about it too, certainly when I buy groceries and items. I mean, if you think about, the world, the population just seems to be growing. How do we feed the world? And how do we, in an environment where these higher temperatures are leading leading to fires and making it tougher, certainly when it comes to farming.
Yeah, it's really interesting to see what's, if you pull back the hood in the Bloomberg terminal and see what's in the VegTech Invest ETF. EATV is the ticker. You got companies like Vita Coco, which perhaps makes sense, and Mission Produce, of course, makes sense. But then you got companies like Tesla in there as well, Carol, and Anheuser-Busch, which I know we talked about last time with Elizabeth on the program. And, Ginkgo Bioworks, Molson Coors in there, and then, of course, Beyond Meat as well.
Well, and, there's something I know she thinks about and writes about and talks about, but food security, it's an issue of national security. We take it for granted, but man, when we saw certainly the Russian war in Ukraine, and the wheat basket, and you think about the world where they get grains, like all of a sudden that was a difference. Hey, Elizabeth, I think we've got you back. Elizabeth Alfano, Chief Executive Officer of VegTech Invest. So tell us about the trends when it comes to the plant-based world. What are the important ones for the investing audience?
Yes, so I'm thrilled that the investing audience is finally getting this information because it's so critical for those ESG investors. So a report just came out from Boston Consulting Group stating that investing in plant-based innovation is 3 times to 20 times more impactful as compared to investing in alternative building materials or even alternative energy, cars, aviation, et cetera. So for that ESG investor who's really interested in moving the needle for the environment, it's a big play.
I want to talk a little bit, we don't have a ton of time with you, Elizabeth. We're going to have to get you back on. But a little bit about innovation in the space. Carol and I have both covered companies like Beyond Meat and Impossible Foods. And one thing that we both notice is the high sodium in these and the high element of processed foods in there. And I'm wondering, when we think about plant-based, how do we get to a place where this stuff is less processed and even more healthy than it is now?
I love this question because we in finance look to benchmarks. So when we say that something is healthy, it's healthy compared to what? So is a Beyond Meat burger healthy compared to meat? Sure is. Doesn't have cholesterol, has some fiber, doesn't have trimethylene oxide, antibiotics, and hormones. But is it a carrot? No. Is it a head of lettuce? No. So it is a step in the right direction, particularly for all those meat eaters. It's not for vegans. I like those folks, but they're a small, tiny part of the market. It's for the meat eaters that are trying to get a better option for themselves and the planet. So not only are you going to see more innovation with plant-based products so that they'll continue to be healthier and that step in the right direction, but you'll see a whole movement of whole food plant-based products that aren't processed at all. So you look at this sector and you see that, oh my gosh, we're just at the beginning of the innovation curve, and there's going to be so much more.
Elizabeth, just got about 30, 40 seconds here, but fund flows, what kind of flows are you seeing? Because I hear what you're saying, I hear what Boston Consulting is saying, even our BI team is saying. I mean, realistically, investors right now who've had a tough year are looking for performance. What are you seeing in terms of investment flows into your fund, just quickly?
100%. We are seeing people take note because they want to buy on the dip and they see a secular trend coming their way. So they want in early. Of course, the market's a mess. I mean,
so our flows, is new money coming in?
Yes, new money is coming in. Do we want more? Yes, we do. Could we grow faster? We're waiting for that market to turn around because we know that this secular trend is going to really skyrocket.
All right, we're going to leave it on that note. Elizabeth, thank you so much. Elizabeth Alfano, CEO of VegTech Invest, joining us on the phone there in LA. Hey, just to wrap up, Tesla shares have been bouncing around. We saw a big rally, big pop right after their latest update. Stock went a little bit down, but it's now up about 0.9%. So, Tim, well off its highs.
Yeah, I'm also looking at shares of United Airlines because the company reporting its numbers. It's going to have its call tomorrow that came in below expectations. Shares, Carol, down 6.5% in the after hours.
Yeah, so both of these names we're going to be following certainly into the, wow, it'll be already Thursday. This is what happens when you take off Tuesday. Your week kind of flies.
Welcome back.
Oh my gosh, so much going on. I will continue to track earnings, of course, and some of the big macro stories. Coming up next is Sound On, news out of Washington. A little bit going on over there, too.
Yeah, quite a bit of news coming out of Washington. We got President Biden traveling, too.
Yeah, big time. All right, for Tim Stanovic and the whole Bloomberg Business Week team, have a good and safe evening. I'm Carol Masser, and this is Bloomberg.